Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Well, that was a rough day, and the truth is tomorrow might not be any better. Really, we're probably not going to see any kind of real potential for upside until after Wednesday. Whenever the Fed gets together, Jerome Powell has his announcement at 2:30, right after they make the announcement of what they're going to do for rate hikes. And then maybe, depending on what they say, we might see a little bit of a relief. But why are we here? How did we get here? Well, if you recall last week, I was making several videos leading up until when we got the CPI information on Wednesday. I was making videos talking about how this is D-Day. These are the days that we are going to really be looking back and deciding which way the market's going to go. And so what happened was the CPI came out, Consumer Price Index. If you don't know what that is, it's essentially how we measure inflation month over month, year over year. And the long or the short of it is that inflation came in hotter than what we expected. All right, it came at 8.6%. We were expecting somewhere 8.2, maybe 8.1 if we were lucky, right? 8.3 is what we saw the previous month, but instead it came in even hotter than what we expected. So because it came in hotter, all of a sudden this signaled to the entire stock market, all right, the Fed is definitely going to continue raising rates. They might even go more aggressive. So what we saw on Thursday, what we saw on Friday was just a decline, precipitous decline in everything, in stocks, in bonds, in everything, right? I mean, the NASDAQ, the S&P 500, the Dow, they all tanked. Then Friday, same thing happened. And then we had the weekend. And then here we are on Monday, and it continued to crater, all right? So something that we found out today, this is a potentially leaked rumor, insider information that a reporter released saying that they believe that now that the Fed on Wednesday is going to raise rates by 0.75, all right, so 75 basis points. This is something that doesn't happen, all right? This is essentially something that is unheard of, right? Normally, the Fed will raise about 0.25%. Right, or they'll raise 50 basis point, which is what we saw in this last rate hike. But 75, that's a big, that's essentially a shot of injection into the market, trying to fight inflation. So the market is freaked out by this. The market doesn't know what's going to happen, and the same thing I've preached over and over for the last year on this channel is that if there's one thing that will rock a stock market, will rock any market, is uncertainty, all right? The market doesn't like uncertainty, and right now, we are peak uncertainty, all right? What's the Fed going to do? Are they going to raise rates by 75 basis points? Are they going to do 50 this month, 75 next month? Are they going to add another meeting in between? Are they going to go up a full percent? Nobody knows. That's the problem. And on top of that, sure, CPI went up, but that's not the Fed's preferred metric for measuring inflation. So does that play into this? And maybe everything the Fed has done is already happening. It's just taking a while to work through the economy. And in reality, we are seeing meaningful declines of inflation, right? We do see housing dropping. We see what's happening with lumber, right? I mean, everything that we really see right now with regards to inflation is all tied back to oil, right? The price of oil, right? Oil is skyrocketing. Right, and that has ripple effects. Everything we move leverages oil one way or another. So what's going to happen here? What do we do? Well, the truth is we can't predict any of this. And I don't want to be somebody who's going to fearmonger or anything of the nature, but the reality is this can get a lot worse, a lot faster. Now, here's the big problem that we're at. Nobody knows what the truth is with the market sentiment. So on the one hand, you can make the argument, if the Fed goes ahead and raises 75 basis point, the market may find this as bullish just because it says that the Fed's taking this seriously, that they're pulling all these rate hikes forward so that we can go ahead and get on the other side of this, right? The idea is like, look, if we're going to have to do this, right, I don't want to sit there and take sip after sip of my medicine. Let me just take it in one dose and let's get through this, right? The faster, the better. And the market may appreciate that. On the other hand, if we go up by 75 basis points, the market may freak out and the stock market may tank. Nobody knows which way that's going to go. There's another scenario that could play out. We could get a 50 basis point, just as we've been predicting for the last month, right? That could still be the way the Fed wants to approach this. And this can also go either way, right? On the one hand, everybody's expecting a 75 basis point right now. So if the Fed sticks with the 50 and that's all they do, the market may deem that as bullish because the Fed's being more dovish, right? So that's a possibility. On the other hand, if they only do a 50 basis point, the impression could be the Fed is still behind. They don't know what they're doing. We have no faith in them, and they are just getting out of their element. Like they're going to get to a point where no matter what happens, they're going to have to Paul Volcker us. In other words, they're going to have to increase rates so high, and they're going to have to put us into a deep recession just to get inflation under control. So what's going to happen? Well, I don't know, right? Nobody knows. This market is chaotic, right? It's just going up and down, and nobody knows what to do. And so these are all of the scenarios that can play out. In this, the fact that I can make an argument pro and against for 50 basis point, and same with 75 basis point, this is at the root of what the market hates, uncertainty. So what am I doing? Well, the truth is I'm over here just trying to keep my nerves calm and trying to keep my head above water. Why? Because I don't know what the right move is anymore. All right. It's the truth, right? We can easily go and sell off a lot more, but at the same time, I'm invested in Tesla, and I stand by what I've been saying all along. I think Tesla is still the best investment in this atmosphere. I don't think there's a better investment. So much so that while we see other electric car companies, transport companies, right, we're starting to see bankruptcies happen. I think there's 3 different bankruptcies that happened today alone, right? While we're seeing all of this in this environment, everything is selling off. Tesla went down 7% today. Yet, what happened? Tesla got an upgrade, right? An analyst upgraded Tesla today. So Tesla has no debt. Tesla has a very strong balance sheet. Tesla just opened up orders for Model Ys in Australia. And what did Elon Musk tweet? He tweeted that he did not realize how much demand there would be for the Model Y in Australia, that after 3 days, it essentially got back ordered by a year. And so he said that they're going to work on ramping up Model Y vehicles that are right-wheel drive. I think that's how you say it. So in other words, being able to have the steering wheel on the other side of the vehicle. The point is, Tesla has so much demand. Tesla has so much cash that's coming in, and Tesla has such little debt. There is no better investment, in my opinion. I don't think Apple is. I don't think Microsoft is. I don't think NVIDIA is, right? I definitely don't think any of these safe names that you see or any of the Dow Jones type names, I don't think any of those are the best places to be. Now, does that mean that we're going to be in a lot of volatility? Yes, but it doesn't matter. You can be in NVIDIA, you can be in Tesla, you can be in Coca-Cola. It doesn't matter. Volatility is here. And it's going to continue until we get clarity from the Fed, until we get clarity on inflation, and until we see oil prices come down. This is the market we're in. The best thing we can do is to try and keep our emotions tamed and try to survive and ride this out. Look, we've been going on this for a while now. This all really started in November, essentially when transitory was taken out of the vocabulary of Jerome Powell. Ever since November, we have been on this roller coaster. All right, so that's been about, call it 6 to maybe almost 9 months at this point that we've been going through this. I really think that we're in a recession. I think it's beyond clear that we're in a recession, and we will find out in the next month or two whether or not we're in a recession. And I think that's another element to all of this chaos, is that more and more people, more and more analysts are starting to bake in the idea that we are in a recession. It kind of boggles my mind to see everybody talk about 2023, how in the back half of 2023 you might see a recession. Yeah, I don't understand this. We already had a negative or a decline of GDP in Q1. Are you telling me Q2 is any better? I keep hearing everybody say how strong the economy is, how strong the consumer is and all this. It blows my mind. Janet Yellen sees no signs of recession, apparently. How do you see no signs of a recession? We literally had a decline in GDP in Q1. That's a sign of a recession. We see companies going bankrupt. That is a sign of a recession. We see prices cratering. That's a sign of a recession. We see oil up. That's a sign of a recession. So I don't understand what's happening here. All of these talking points, all of these talking heads, and I don't know if it's just a political thing at this point. I don't know if it's just a naivete. I don't understand it. But the truth is, we are in a recession. I don't know. I think we're in a recession, right? I don't want to give any absolutes here because the truth is we don't have the data yet. But more and more people seem to think this. It's become a more popular thing. Even Jim Cramer, out of all people, he said that he thinks that we're probably in a recession at this point. So what can we do? Well, the truth is, if we are in a recession and we get confirmation of it, that could be a better thing than not, right? Because again, it goes back to market certainty, right? Market likes clarity. And if we know that we're in a recession, if we know that inflation has peaked, if we know what the Fed's going to do, all of this brings stability and calmness to the market because at least then the market knows what to do and how to react. So while we get through this week, there really isn't anything you can do other than sit on your hands, right? Do what's right for you, protect yourself, right? Make sure you have enough reserves to pay your bills and everything of that nature, of course, but don't overreact. Don't completely panic and sell everything. None of this financial advice. These are just the words I would say to my kids or to anybody else if they were to ask me one-on-one. But I wouldn't make any sudden moves, all right? Tomorrow, probably another day of volatility. Wednesday is probably going to be a really, really flat day up until we start getting these announcements. And then Jerome Powell speaks. And then Thursday, who knows what happens. This is going to be a tumultuous week. But we'll get through it. And we'll get through it together. So until tomorrow, do me a favor. Hit the like button. Hit the subscribe button. Ring that bell. I love you all. Hang in there. We'll get through this. We'll see where we are at the end of the week. Peace.